Starting off strong with our multiple choice questions here on business structures, we've got two individuals, and these individuals are planning to start a business and need advice on selecting the appropriate form of entity. Luckily for them, they run into you, and you are now becoming an expert in business structures, what the appropriate and best business structure would be for different taxpayers. Their long-term business plan contemplates receiving future in-kind property distributions. Which of the following is a pair of business entities, each of which can make a distribution of appreciated property to its owners that would not be taxable to the business entity or to its owners? All right, great question. Wonderful question. Now, first off, we've got a couple criteria. Let's identify the criteria. Well, we want to make in-kind property distributions, and we don't want them to be taxable. As such, what would be a great place to start is a process of elimination. And that's a great strategy for most questions. And when it comes to here, well, I would say eliminate any entities you know that have taxation to the business owners. And what would that be? I'd say first slam dunk is corporations. So right here, we can eliminate corporations, especially C corps, yes, and LLCs if they're taxed as a corporation. That as well would be taxed to the shareholder. So we would eliminate letter A based on that rationale. And to give you a second, think about another one we could eliminate here. Going once, going twice, going 3 times, and I am going to eliminate again the LLC and the S corporation here for that same reason. Now, S corp, this is going to be an entity where if you have any sort of activity left over from being a C corp, it will be taxable. So it's not the best answer there. Generally, you want strictly flow through, and LLC again that can be taxed as a corporation, so we would likely want to avoid that as well. Giving you a little bit more time to think about it. Going once, going twice. Well, again, because of that same rationale, we want to avoid the S corporation. S corporations here, like similar to what we just saw, S corporations are subject to pass-through taxation, meaning that any profits or losses are passed through to the individual shareholder, and then they report them on the individual tax returns. That means that any distributions of appreciated property to the owners would be taxable to the business entity or the owners. So as such, we want to eliminate that. Now, why would that leave letter B as the best answer here? Let's talk about it for a second. Well, both general partnerships and limited liability partnerships, these are pass-through entities, meaning that any profits or losses, these are going to be passed through to the owners, who then report them on their individual returns. Any distributions of appreciated property to the owners would not be taxable to the business entity or to the owners. That is going to maintain at that level, leaving with letter B here, general partnership and limited liability partnership. Next up, in year 1, a domestic LLC with 2 members elected classification as a corporation. In year 2, one of the members withdrew from the LLC. Not good. Hopefully there was no bad blood there. What is the LLC's tax classification for year 2 immediately after the member withdrew? Let's think about this for a second. And let's just take a look. We've got a couple interesting answers. You got corporation, which, okay, that's pretty standard. But then a liquidated corporation for tax purposes. Is that one we've seen? I can't say particularly we have. A new entity eligible to make a classification election, and a single member LLC disregarded as separate from its owner. In this case, no, this is not going to be the case. Let's just think about this again. They've already elected to be taxed as a corporation, and you don't need to, this wouldn't mess with its corporation status. So we wouldn't have letter D. Just because someone withdrew, that doesn't mean we're going to now not be a corporation. A new entity eligible, corporations, if you remember, corporations, the whole point of that is they live a long time. They can have an indefinite life. They live long past the life of shareholders, of the original founders, of anyone like that. That's the purpose. And just because someone withdrew here doesn't mean we're going to have a new entity. And again, similarly, a liquidated corporation, well, we're not liquidating this here. This is still a normal corporation. They're trying to trick you into thinking that, oh, this is a big deal, that because they had 2 members and one withdrew, then that's an issue. Obviously, that might be an issue when we deal with partnerships or situations of the like. But in this case, it still would be a corporation. Now, once a domestic LLC elects to be taxed as a corporation, it is going to remain a corporation regardless of the number of members it has. Therefore, the classification in year 2 immediately after the other person withdrew is still going to be a corporation. All right, another one in the books. Glad to have it done. Keep powering through, keep practicing your questions, and you will get this. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.